In case you haven't heard this enough, let me say it again. A recession is inevitable. Despite the consumer price index or CPI going down to 8.5% last month, which is supposed to mean the Federal Reserve's efforts to ease rising prices may be working, investors are becoming increasingly uncertain that inflation will fall enough to avoid a recession over the next year. Translation, we are in too deep to get out fast enough to get away from this recession. The S&P 500 plunged to the lowest level since mid-July last week. This could be a reaction to the Bureau of Labor Statistics report. Apparently, the unemployment rate in August rose for the first time in 7 months, climbing to 3.7% from 3.5% the month before. The number of new jobs fell and more Americans started looking for work. And I'm not surprised. Amazon just shut down all its plans for expansion. Amazon, Tesla, Facebook, and other Fortune 500 companies have laid off employees. After the release, Bank of America analysts told clients the data was good news. Apparently, it means that quantitative tightening and what they're doing is working. However, we still think we're going to go into a recession, albeit hopefully a mild one, simply because it's not slowing down fast enough to avoid that recession. Back in the 1980s, we went through the same economic crash, and then Fed Chair Paul Volcker didn't stop the tightening until unemployment got to an unbelievably number of 10%. Powell already increased interest rates by 75 basis points, and the unemployment only went up 0.2%. We are far from where we want to be to control inflation, and we can't seem to do it fast enough to avoid a recession. And if Powell's latest speech is to be believed, more pain is coming for households and businesses. The job market has remained one of the economy's strongest pillars after it bounced back from COVID recession. Still, Friday's employment report could signal a hiring slowdown is underway and looks like they could be leading to a firing spree. According to Bank of America, the number of Americans working or looking for work has reached an all-time high last month, exceeding the pre-pandemic peak for the first time. Whether you're a business owner or an employee, you have to make sure you're looking at your finances. Make sure you have enough emergency funds, and if possible, take advantage, if you have the cash, take advantage of this downturn. Prices are cheap on a lot of assets. This is probably the best time to buy. More importantly, reinforce your hedge. Get your insurance. Make sure you protect some of the value of your assets, and there's no better way to do that than with gold. That's where Noble Gold Investments comes in. Call us. We have people waiting on the phone to answer your questions. It's a no pressure call. We obviously love precious metals, and that's what we're doing, but our main purpose is to serve and give you service and to answer questions. So if you're interested, give us a call at 877-646-5347.